And thanks so much for joining this meeting. Last week was a emergency, so I had to reschedule this meeting. But I have been extremely excited to share this webinar to discuss what is going on in our economy nowadays. Has been absolutely a crazy time. So just 2 more minutes, guys. Can everybody see my screen? I'm assuming you can see my presentation screen.
A map of the United States.
That's right. And that is
48. Well, they're all there. Yes, all
yeah,
50.
they're all there. They're all there. So this map, let me go ahead and just start patient. So this map actually represents what Johns Creek Capital owns across the nation. That is our presence in the United States. Mobile Home Park is very much an American asset, so most of them are in the all of them are in the United States. And our presence is quite heavy in the Midwest, as you can see, 4 here, and then one in Wisconsin, over here. And, we're based here in Georgia. We have one here in Georgia, and we kind of spread it out from this center in Georgia to a little bit up northeast, kind of the entire southeast region. One in Florida, one in Georgia, and then plenty in the Midwest. And then just here and there, one in Montana is a very small park, and one in Arizona. We do want to spread out to the west a little bit more. However, the market has been very heated. The Western market has always been extremely heated, and it's getting more and more heated. And we're very, very glad that we're able to get a park out in Arizona. It's doing really well, and just one here all the way up in the northeast. There's one in Maine, doing very well. Lots of snow there, but has been a nice little small park that actually one of the first parks we got. But the northeast is an interesting market due to several reasons, not limited to things with the legislature and people moving in and out, and we just don't have a big presence there quite yet. So we're kind of focusing on expanding our presence in the Midwest and the Southeast. So yeah, it is a map of the United States, but the number represents how many parks we have in that particular state. And the darker the color is, the more parks we have there. We have quite a few in Kentucky, some in Ohio, definitely many more in the Midwest. Okay, I think we're gonna get started. As people join, I'll just go ahead and let them in, but let's go ahead and start it, because we do not have, everybody has a busy schedule, so I'll go ahead and get the webinar started. So first of all, thank you so much for joining and being flexible for dealing with this rescheduling due to my own emergency last week. So today, topic is on fighting inflation with mobile home park investing. So we all know, you probably have heard by now, based on everything that, since the pandemic started, and even before pandemic times, inflation has always been a big cycle in the US economy, and it's not stopping anytime soon, especially with the pandemic. Things have gotten worse and worse, and then just last year, and actually this year as well, we've kind of hit a record high. In the past 20 years, the past 2 decades, we've never seen inflation so high. And then because of supply issues, because of the, pandemic-induced issues a lot of times, and other economic issues that all came crashing down. And today, I want to talk about how do we survive such a high inflation environment. And one thing that I want you to take away from this webinar is that buy real estate, right? So you can say that I'm biased, but buy real estate, and buy more real estate. The reason being, real estate has been also, if you're not muted, and then there's some background noise, can you please mute yourself? That will really help. Thank you very much. Real estate has been the best tool against inflation, really ever. If one of the best tools for sure, if not the best tool against inflation. That's because of 3 different things real estate offers. Number one, It's because of appreciation, right? Land appreciation, hard assets such as land and improvements, just like gold and silver and other special other metals, they have their inherent value that would not change too much based on nominal currency fluctuations. And because of that, the hard asset has intrinsic value, so it appreciates. Property values appreciate. Number two, real estate offers is income and raise rent, aka income. And you have that income stream that also fights against the higher price. Number three is a very, very important one, is we have leverage in real estate, which is a fancy way to say debt. And when inflation goes up, the debts actually get eroded, meaning that, if you take out a mortgage on a house, we're talking about mobile home parks, but let's just say in any kind of real estate, you take out a mortgage on a house, that's capped at that rate. That's capped at that fixed amount. Let's say you buy a $500,000 house and you take out a, $300,000 mortgage. It is $300,000 is the mortgage amount. Just because inflation goes up does not mean that your lender can all of a sudden say to you that you have to pay us more. But $300,000 is always going down. So actually it plays in your favor. Inflation is your friend when it comes to the debt, the leverage in real estate. So that's why in general, real estate is a very, very great tool. Now, mobile home parks particularly, but we're going to go into why mobile home parks are particularly well positioned to fight inflation better the other real estate asset classes. Like I put here in the golden text, inflation actually helps mobile home parks value add strategies. Okay, there's a lot of background noise. Can you please mute yourself, please? It just kind of echoes in the back. Thank you. The mobile home parks, the inflation actually has a different definition. The ability to raise rents and produce higher values while being recession resistant. And we're going to go into why it is easier to raise rent in mobile home parks, which plays into the higher income producing assets, mobile home parks especially. And, people say the best way to fight inflation really is to make more money. And that's easier said than done. And because the wages have been very much stagnating for years and decades at this point, and it's going up, but it's nowhere near catching up to the rate of the inflation, especially in today's environment. So, and what we really want to talk about, wanting to know is that mobile home park rents are really stuck in the 60s. What I mean by that is, nowadays you read lots of articles and they portray mobile home park landlords as those people who are bloodthirsty, people who just gouge the tenants and they raise rents immediately, and they take the only affordable housing option away from the hands of tenants. And then we just treat them like ATM machines. If you go to one of the mobile home parks that, anywhere really, you wouldn't be too hard for you to meet someone. It wouldn't be too hard to meet someone who complains to you that, oh, my previous landlord treats this park as an ATM machine. A lot of times that's because one of the strategies we actually implement is to raise rent immediately after acquisition. Now I'm going to go into why this ties into fighting inflation, why this is necessary for mobile home parks, and why mobile home parks, unlike other real estate asset classes such as retail, commercial, or apartment buildings, it's not as easy to do so, because we as park owners are actually merely playing catch up to this 1960s rent levels. So here's why. How much was the average lot rent during the 1960s when most parks were built? It was actually only $50 back then, which, with inflation, which is today's topic, it translates into $500 in today's dollar amount value. So, but that logic the average lot rents should be at $500 per day, but that is far, far from the truth. And if some of you guys in the audience have participated in deals with us at Johns Creek Capital, you probably know that we presented to you that the average lot rent in the Southeast is really the average lot rent in the Southeast is $100, $150. Sometimes you get even lower, depending on the rural areas and depending on, the condition of the park. It's really around $150 to $200. An average lot rent in the Midwest, slightly higher to 250 to 350. And out west, you get a little bit higher depending on how far you are from the city. But the national average, you're looking at $280 to $300. And that's nowhere near where it's supposed to be in the $500 range. And what that tells me and tells a lot of investors. And that's why this niche is really getting more and more attractive and sometimes really more competitive. It's because there's a lot more meat on the bone. To start with, where it's supposed to be at is $500. It's only $280, which is really far from a mobile home park perspective. Because if you know our strategies, we usually raise lot rent no more than $50 per year. So we have a long ways to go. So that's number one. We're playing catch up. And what the media also fails to mention is how expensive it is to make improvements to the infrastructure of mobile home parks. A lot of the parks are really old. They were built in the 80s, 70s, and a lot of their plumbing system and their road, their electrical system, everything needed an upgrade and needed fixing. And those were expensive. So that's a lot of times the media really portrays a one-sided story. And I think if you look it up on the media, it's usually, anywhere on YouTube and any kind of media platform you look at, is usually overwhelmingly favoring the tenants, saying that, oh, we're just gouging the tenants. But this is the information that they're failing to mention. And what is more is that we're really not taking away the only affordable housing option, the only one of the most affordable housing option in the United States that's left. They say that we're taking this only one option away. Here's the thing, right? If you have a bakery, right? If you have a bakery in town that usually sells, $1 bread, and you're the cheapest one in town, and economy changes, inflation goes up, and you raise your price to $1.50, and that does not make you less affordable than the other options. You're still the best value for money option ever in that town. So this is the entire mobile home park conundrum, is that we are that bakery where we are already offering the cheapest housing option for the best value in town, because people want pride of ownership. They want their own home. They want their own neighborhood. It's really just a neighborhood. And our job as mobile home park owners is to make that neighborhood a better community. So, and with apartment rents, if those of you who have invested in apartment complexes, you know how expensive those can be. They're generally apartments in the United States are about over $1,000 to $2,000 higher than those mobile home park lot rents. So why shouldn't we raise lot rents upwards? So that's why we're raising the rents. And raising rents really is one of the major plays that can go really well with inflation. Inflation enables us to raise rents. And here is more details. So how does inflation help mobile home park value increase? To go on what I just talked about in the last slide, appreciating value, increasing rents, appreciating debt. So first of all, mobile home parks is a land business. The one thing we need to know, if this is your first time joining a webinar on mobile home parks, a lot of people confuse mobile home parks with mobile homes. They're completely different. Mobile homes is something that we want to avoid at all costs, really. We do not want mobile homes. Mobile home parks are land. It's a land business, the parking lot business, and mobile homes are cars. And we know cars they're not real estate. They're not really appreciating assets. So mobile homes almost never appreciate, and they're a liability, they're a headache, they're trouble. So we want to get rid of them. That's why we own the land only, and that's what we're going after. And land is a hard asset. So being a hard asset itself, like I said earlier, it has inherent values regardless of nominal currency fluctuations, just like gold, silver, platinum, other precious metals. So example is that if you own a park valued at $1 million with a $800,000 loan, inflation goes up by 3%, then the value of this park rises 1.03 million. In the meantime, the dollar fall to 97 cents of the purchasing power. That stays the same amount regardless of inflation, and is fixed when you take out the loan. So inflation goes up, that goes down. The property worth $1 million with $800,000 mortgage would now be worth 1.03 million with the $800,000 mortgage, or a gain of 30,000. This is true for all forms of real estate. And what mobile home parks have a special advantage. All of the things that I just mentioned, kind of in a more detailed way. So that those were pretty much applicable to most real estate asset class, but particularly mobile home parks, because we have shorter leases. And this is really quite a unique phenomenon only in mobile home parks. And I understand that maybe, in retail and especially in apartment multifamily space, month to month does exist, but it does not exist on the scale that it does in mobile home parks. In mobile home parks, I would say in the parks that we operate, 90% of all leases are month to month, meaning that we, month to month leases, a lot of people, people are new in real estate really do not like month to month leases because they think that, oh, that gives the tenant so much flexibility and they can just pack up and leave. And the fact of the matter is, it really does not. Here's why. What the flexibility gives, it's the flexibility belongs to you as a landlord. You have the flexibility. The year-long lease in mobile home parks, anyways, really drives. It really just binds you as the mobile park owner, as the landlord, who really it binds you. It really locks down those options for you. And for for mobile home park tenants, if they really do not have any pride of ownership, they can pack up their bags and leave in the middle of the night, abandon their home. An abandoned mobile home is really bad news because now you're stuck in a pickle. You do not own the home, so you do not have the rights to enter the home. You have to fight a legal battle with the court to trace down this person. It's just a nightmare. So really, month to month gives you all the flexibility you need to do whatever you want with this lot because it's a parking lot, right? What does a parking lot tell you? The parking lots usually are short term, right? So mobile home parks is really very much similar to a parking lot model. This is what I keep telling people is that, don't think of it as a typical rental real estate model because it's not in the fixing toilet, plumbing, toilet fixing furnaces business. It is a parking lot business. So in a particular parking lot, when a car wants to park on your lot, usually the leases, contracts are very short. So 90% of all of our leases are month to month, unless this tenant is a special tenant in the case where he may be our point of contact or he may be our property manager or some sort of special case, but most likely they're month to month. So what that means is that when inflation goes up really quickly, especially in the past a year and two, inflation was really just skyrocketing within months that you wouldn't think that would happen so quickly. So with a month-to-month lease as mobile home park owners, you can raise rent within 30 days notice. You do have to give your tenants notice based on state regulations. Most states 30 days, some states are 6 days, but in most cases, we can raise rents by $50 or keep up with the inflation, which at the same time boosts the value of our park along this right around the same time, almost immediately when we see the economic trend goes upwards. And this is a special function of this parking lot business that most real estate sectors do not have. So raise rents immediately due to the short nature of tenant leases when inflation rises. When you're about to see, when you're seeing this inflation is about to rise, a lot of us are very much well educated and well versed in economics, and you understand when when they keep printing that much money, and when the demand shortage supply shortage was so severe last year, you think you see things about to happen. So, well, retail, commercial, and multifamily usually have year-long leases, and we're different. We're just a very special animal, and we all know how much retail and commercial, multifamily to a lesser extent, uh, they really lost a lot of revenue during the pandemic, and still today, a lot of effects are lingering today. But in mobile home parks, our revenue really went down by 5 to 10%. Multifamily and especially retail and office building, not to mention hospitality. Hospitality, you're looking at 70% revenue decrease during the pandemic. Retail and commercial, you're looking at 40 to 50, and then multifamily a little less, and mobile home park only 5 to 10%, which is really, really outperforming all those asset classes. So in an economic recession, um, whichever asset class that can give you those three aspects the most will help you against inflation. Number one, appreciating the asset. Mobile home park is an appreciated asset because it is a land business. So that's check. Number two, increasing income. Are you able to increase rents quickly to keep up with the inflation and increase income? And I just mentioned that the month-to-month lease and the already low, incredibly low lot rents compared to what it should be. There's a lot of meat on the bone because mom and pop owners, they usually do not raise rent because a lot of them were the original builders of the park. And unfortunately, a lot of them, not all of them, but many of them grew kind of attachment to this park. They know the people there. They kind of never just turn around to raise the rent or raise the rent enough. You could tell by the meat on the bone today. So, and number three is depreciating asset. This applies if you have leverage, you have debt on the property, which in many mobile home park cases, we have plenty of parks in our portfolio with loans and mortgages. That really plays in our favor, meaning that, well, since the dollars are worth less nowadays, and we're really just essentially paying out less money while we can raise rents immediately, and the value goes up along with the NOI, the net operating income goes up, which in multifamily, in commercial real estate, in any business, the net operating income is pretty much the golden standard when determining how much your property is worth. And so really, that is why mobile home parks really fights against inflation. It's really a simple concept, but um, maybe does not, if we want to go deeper, maybe 5 webinars wouldn't cover it. But in a nutshell, those three aspects are really what you need to be looking at when you're evaluating an investment opportunity. Does it offer you appreciating asset? Does it offer you increasing income? Is it able to increase the revenue? How easy is it? Can you raise the rent immediately? Are you able to raise rent? Because you want to be careful. You don't want to raise rent by $1,000. No one is able to afford it. But in mobile home park sector, you can do that. And number three, depreciating debt. And those are the three factors. And in other investment vehicles such as stocks, bonds, mutual funds, other types of vehicles, a lot of times it does not offer those features. So that's why when bad time comes, buy real estate and buy more real estate. So to wrap it up, it's really kind of a short webinar. I'll leave some questions, time for questions if there are any. I don't want to hold you here for too long. You can look at this chart right here, right? This is for the past 20 years. This is today, right? I don't know if you can see my mouse, but this is today. We're at an pretty much all-time high. Went down a little bit, but really at a very high level, record high for decades. So This means that we are really, really at a good time to buy more real estate, to buy mobile home parks. That's where you want to park your cash. You don't want to park your cash in your savings account. I mean, I think most people know that already. That really does not protect you. It does not protect your asset, does not protect your future. You really want to find an asset class that will help you in that regard. And mobile home parks, like I said, which is the whole topic today, is that it really helps fight against what this curve is showing you, uh, which is inflation, high inflation. And it may go down. None of us are, we don't know what the future holds or crystal ball, but given the way the economy is going right now, I don't see this inflation going down rapidly anytime soon. So we're really at a record high. So the carnage really on all investment sectors has been vast, and only those designed to handle such forces will succeed. And mobile home parks are one of those investments, and if not the best investment. Um, so that's really wraps up this short webinar. Here is our contact information. I think all of you already have this, but just in case, since you signed up for this webinar. So if you guys have any questions, please feel free to ask me now. If not, I will see you in the next webinar. We have this every month, and please email me and let me know if any other topics that would be interesting to you. I will definitely focus on that one, and we just have a lot more better content coming up. So any questions, anybody? I don't know if I can. I think you can unmute yourself. But if not, we will just see you in the next webinar. And if you don't feel comfortable asking questions online, you want to email me directly. Here's my email. And you can actually find a lot of the answers through going to our website at johnscreekcapital.com. I have gone on, I think at this point, 35 different podcasts just talking about this asset class. So I think lots of answers laying there as well. And our website is really good, great source. So again, if you have any questions, speak up now. If you don't feel comfortable speaking in public, please feel free to email me later on. And thank you so much for joining. I will stay on here for a couple more minutes in case anybody else joins really late and doesn't know what's going on. But for those of you who don't have any questions, go ahead and enjoy your evening. Thank you so much for joining.
Charlotte?
Yes, sir. Yes.
Yes, Stephen here. I communicated to you previously. I have a question. Usually when we are holding, real estate property, we can claim depreciation, and this is something that gets into the taxes very efficiently. But is there, in the taxes, there is a tax tax bracket or the tax issue that can be kind of claimed on the basis of home that is essentially rented that depreciates. Is there any similar thing in the mobile home setting, or?
Great question. Yes.
Yeah.
So very, very good question. Tax advantage mobile home park. So
Yes.
Usually what depreciates in a mobile home park scenario, if we do not own any mobile homes, which is what we usually do because we do not like mobile homes, they depreciate. But in this case, it plays in our favor. Let's say in a typical scenario, mobile home parks, we do not own any mobile homes. It is the infrastructure, the utility lines, right? Sewer lines, water lines, electrical poles, all the infrastructure that will depreciate in this case, because like a multifamily apartment building, they actually have the physical structure there to depreciate, right? So mobile home park, the similar thing, is our infrastructure.
Okay, and these are essentially significant because the mobile phone infrastructure is much more vulnerable to the, change of the weather conditions on the yearly basis, just to account for the four season kind of, compared to just a single home, I would say.
Exactly. And yeah, exactly. And, think about, there are different utility structures at mobile home parks. There sometimes the park has septic tanks, and septic tanks are they are depreciating, and that's what we use for our depreciation in preparing our taxes, in issuing our K1s for our investors.
But how does it work with investors? Because essentially, we are not this primary partner, or how it's called. I mean, we are kind of investors.
You're investors, but you're also partners in this deal. So how it works is that we usually form a company around a deal, right?
Okay.
And we form a company with a deal. Investors are all partners in this company, right?
Okay.
You own the company. The company owns the park, and investors own the company. In turn, investors own the park. So that's how it works. So what we do, investors are Class A participants, Class A partners, right?
Okay.
And as to how much an investor owns this company depends on how much he invested. Let's just say, to make things simple, right? You invested, $500,000 in a $1 million deal, then you own 50% of this company, right? And that's how the K1s get split up, and that's how it gets divided based on each investor's share. But the total amount is based on the total, depreciation.
Yes.
Our CPA prepares.
But same way the tax kind of gets benefits, kind of, that if I have a 50%, then out of this tax reduction, I'm taking 50% and
yes,
other investors. Okay, so
yeah,
it's
so
in
your share of your write-off, right? Your share of the write-off depends on your equity in the deal. So you're right in that the more you invest, the more equity you have in the company, the more depreciation share you're able to take, and the more write-off you have.
And you are providing this to the tax,
yes,
to the kind of tax entity.
Correct.
Like myself, you will send some paperwork that reveals that numbers and all of this.
Yes.
Okay.
Yeah, it's very straightforward. It's the K1s that we issue every year, and you'll be able to see the number is pretty straightforward. We will circle the numbers. Here's your write-off. Usually the first year, because mobile home parks have a shorter depreciation schedule than most other commercial real estate. That means the first year, especially if we chose it that way, we can have the most write-off. Some people, sometimes we close a deal on December 31st of the year, just so that we can have a huge chunk of write-off next year. And it worked in our favor for several years consecutively at this point. So you will see. But yes, we do provide that information.
Oh, excuse me. So do you have any deal in the works?
Currently, we have a very active pipeline, and we have a couple of deals that's in the negotiations period. We do have one in Florida that's already been fully subscribed to, and that's closing next week. But the ones that we have in the pipeline, we have a couple of deals that we're negotiating with the sellers. And as soon as we have them, if you're interested, please reach out to me, and we'll talk, and then we'll send them to you. And if you already talked to me before, I'll definitely send them to you once we have them. But yes, in the works.
So this will be my first time. So to get on the list, I should talk to you first and understand everything. Okay.
Right.
I will
so
schedule. I mean, I have a lot of experience with the apartment complexes and various other real estate ventures, but not on the mobile home park.
Yeah, I understand. We have a lot of investors who have had, like you, have had multifamily and other commercial real estate experience, but have not really ventured into this niche. So please email me at cdunford@johnscreekcapital.com, and we'll set up a call. You just to understand, experience. I like to talk to every single one of my investors, and just to get to know them, get to know their investment need, and then it's pretty straightforward afterwards. Just send you deals going from there. So.
Okay, sounds good. Thank you.
Yeah, thank you. Any other questions? All right. So if there are no other questions, and again, if you're not comfortable asking on here, please feel free to email me, go to our website to reach out to me. I usually respond within the same day. And I'm happy to answer any questions you have about this topic, about us, about me, about any of the services we offer. Pretty much just offering deals and robust returns to our investors. All right, guys. Thank you so
Thank
much
you.
for joining. Appreciate the time and have a good evening. We'll talk to you soon.
Thank you, Charlotte. Great.
Bye,
great job.
guys.
Thank you. Bye.